Hello and welcome to a new edition of our Proficient webinar. Today it is 21st of February 2019 and it is Thursday evening, and tomorrow we are going to have our weekly closing. Before that, let us take a look at how the markets are uh, positioned and what we can expect going forward. So as usual, let us start our review from the commodity pack. Before that, let me open the chart of dollar index. So the dollar index daily chart suggests that it is in a primary uptrend, and there is a little bit of pullback, but chances are high that the uptrend will hold its support at around 96 level. Prices are now at 96.3, and if it goes above 97, then there will be higher prices going forward. Now if dollar index is strong, then we can expect some weakness in commodities, but right now that is not happening, right? Let me open the chart of gold, and we will see that as per our expectation for past several weeks, gold is showing tremendous strength, and this week only it has broken out from its January top of 1330 odd levels, and right now it is trading at around 1348 or 47 dollar per ounce level. So primary trend is quite upward, there is no doubt about it. We have been talking about a potential target of 1360 odd levels, and these levels are likely to be achieved. Overall support exists at 1310 odd level, so any pullback will be a buying opportunity in gold. Let's see how crude oil is doing. So this is the daily chart of crude oil. As you can see, the December bottom has been proved to be a primary and primary bottom, and it is of significance. Prices are now trading above the 50-day average but below the 200-day average. Nevertheless, the intermediate trend has turned upward. There was a resistance at around 53 odd level. The resistance have taken out $57.16 per barrel. That is the price. We are expecting the uptrend to continue till 63 odd level, $63 per barrel odd levels. There is the 200-day resistance is existing right now. So pullback in any form in crude oil could also be a buying opportunity, and so we are expecting the uptrend in gold and crude oil both to continue going forward. Now let us see how the US market, US equity market has been doing, and as a proxy we are taking the S&P 500 index, which is the large cap index of the US equities. Some phenomenal strength is being displaced since the bottom of December has been made. The pullback or the sell-off was amazing, and equally amazing is the subsequent recovery. So prices are prices have quite easily surpassed the 200-day average at around 2750 odd level. So we have to say that the primary trend is up, and 2800 or 2790 odd level there is some form of resistance in it was the November top, but chances are high that this level will be taken out. Immediate support is at 2690 odd level. Pullbacks will be buying opportunity, and So the overall trend is expected to remain upward. Now, if that is the case, now let's come back to our domestic market, what Nifty has been doing. Uh, we for the past 2 weeks we have seen um, 9 consecutive falling day in Nifty, and these are rare occasions. But yes, these rare occasions do happen sometimes. After all, mm, the trend is quite choppy, and today it closed at around 10,790 odd level. Prices are still below the important moving averages of 200 day. But in the first week of February, Nifty had made a top at around 11,100. So 200 day has less significance as of now, and this top at 11,100 is important. As long as price stays below 11,100, the trend cannot turn upward. On the other hand, if this week's low, which is at around 10,600 or 610, if that level is broken on the closing basis to the downside, then chances are pretty high that the primary downtrend will resume. We are anyway trading below the 200-day average. So breaking of 10,600 will be significant, and in that case 10,000 will be quite a strong possibility that Nifty is likely to revisit 10,000, right? If 10,600 is broken, because that is where the October low is for the market. Now Nifty as of now is underperforming the global equities, especially the US market. This was the opposite that we saw in November and December. November especially, when S&P 500 was declining, but our Nifty was rising. Now, right now, the reverse thing is occurring, that S&P 500 is rising and our Nifty is declining. So that is the view right now. 10,600 will be the make or break zone for the bears. Any violation of 10,600, possibility or probability will be higher that Nifty could revisit 10,000 or levels. On the other hand, we are expecting some resistance at around 10,870 odd levels. That is where 200-day moving average is right now. Both the moving averages are quite flat. 250-day moving averages are quite flat. This signifies the lack of trendliness in the market. So we have to wait for a breakout for Nifty. Either it will occur above 11,100 or it will occur below 10,600. Chances are high that 10,600 will be broken because prices are still quoting below the 200-day average. Now, having said that, we continue to reiterate that market has been quite stock specific, and not all the stocks or not all the sectors are moving. Uh, some sectors are extremely weak, like auto, like PSU banks. These sectors are extremely weak, and they are likely to underperform the market, underperform the index. Say for example, Maruti. Let me open the chart of Maruti. So this is the daily chart of Maruti. Here we go. Yeah, it had made a top, which is a lower top, of course, at 7270 odd levels, and right now prices have declined. Today it closed at around 6800. So yeah, Maruti is in downtrend. Eicher Motors is in downtrend. Ashok Leyland, needless to mention, Ashok Leyland is in downtrend. Motherson Sumi is in downtrend. MRF is in downtrend. So all these major auto stocks or auto component stocks